40 minutes before the closing bell rings. And if any more headlines come out of Greece, you may see these markets start to spike or drop. The door for talks with Greece remains open. But what's on the other side of the door? Time is of the essence, according to German Chancellor Angela Merkel, French President François Hollande. You just heard Andrea Montanino simply say that by Friday we could see, and this was in a Fox Business exclusive just minutes ago, we could see at least one Greek bank go bankrupt. Will Greece be able to make a credible proposal within a couple of days? How could a potential Greek exit impact the U.S. markets? Let's bring in Jim Frischling. He's got money. He's got money in the markets. He's with NewOak President, along with Jack Howe, senior editor for Barron's, and he's got brains. I'll start with the brains right now, Jack.
That's a good move.
I'll take some money.
Yeah, and exactly. Jack, when you look at all that happened today, and by the way, we should not, underestimate the fact that there is a brand new finance minister in Greece. His name is Euclid Sakalotis.
Right.
He's a hardliner, but he was educated at Oxford, so he does have a little bit of UK within him. Is anything going to change within the next 48 hours? There he is.
I hope so. I can't understand if you're Germany right now, if you're Europe, what's the cost of trying to make a deal with a debt reduction right now? Because what you're headed for is getting nothing back, and you're headed for the possibility of having a destabilized neighbor, a neighbor that might be open to advances from Russia. There are some real political tricky things here. And by the way, how long until we start to see social unrest in the streets of Greece? Greece can't.
Yeah, they're cheering now, you see.
If they can't get goods on the shelves, if they can't get medicine in the hospitals, how long is it going to be until this turns into a really dangerous situation?
Well, without Germany or without the ECB or the IMF, without the Troika stepping in, that's exactly what we're going to see. I actually take the under on when the first Greek bank fails, but it's not going to. I don't think it waits till Friday without ECB support.
Sooner?
They are out of cash. So unless there is an inflow of cash, which is going to require actually a big meeting tomorrow night and a big decision, which I don't see happening. The fact is, I don't want to say the Greeks called the bluff of the Troika. They did call their hand. And now, does Merkel and Hollande want to reward with a better package the Greeks, who have basically just said no? So Spain, Italy, Portugal, there are countries that are going to watch this and say, wait a second, you actually play hardball and you get a better deal? And I think that's the issue that Germany and France has to face. Do you want to reward that referendum? I actually think Tsipras might have sold his people a bag of goods. A no, but not exiting the Eurozone. And that's the disconnect that I don't see.
So, Jack, do you think that the no vote, Tsipras absolutely believed that the no vote would give him more negotiating power? We're not seeing that. And we need to tell our people who are just tuning in at this hour, the Germans met with the French and they decided no new money. Absolutely no new money right now. They're not acting scared at all.
Hey, look, it may be that it's just unsustainable long term to have Greece in the euro. That Greece should have a cheaper currency, that's what it needs to adjust to its lower level of competitiveness. But let's see an orderly exit. Let's do our best to avoid unrest in the short term. Let's create a plan to get Greece out of the euro, but let's not give them the boot out the door.
Jim, is there a trade?
The answer is, of course, there is a trade, but
long
unfortunately,
dollar. I don't know. I mean,
the trade that I'm getting comfortable with is right now is why the U.S. markets are not off as much as I maybe would have expected. The fact is, I think people think the Fed is going to this is a reason to stand pat, and we know that's been a good tailwind for U.S. focused equities, or U.S. companies here that earn most of their business right here at home. So I think that's the trade right now. If the Fed stands pat, that's an extra boost to U.S. stocks.
Jim Frischling, NewOak President, along with Jack Howe, senior editor at Barron's. Great to have you both. You'll be back in just a minute. The closing bell. We're about 36 minutes away. And we're back with Jack Howe and Jim Frischling. And Jim, you heard in this hour, and you said 48 hours before a bank goes possibly bankrupt in Greece. And both Richard Haass and Andrea Montanino, formerly of the IMF, said that we may see a return to the drachma.
I think, and I don't know if they gave, if Greece has given Germany and France particularly a way out and I think your previous guest talked about the precedent setting. So Jack and I have been arguing back and forth about the ramifications, and truly there is a better deal than letting it fail, but can Greece and Germany allow it to be bullied essentially by Greece, looking at the other countries and setting a bad precedent?
Jack, you think the Germans haven't done their math properly? Germans not doing math properly?
I'm not sure they have. Look, take the politics out of it and and talk about what a private company would do in this situation. We know that a credit card company that has a customer that can't pay its bill, they try to work out a deal to get something back. Take a look at a service company, like a cable TV company or something like that. They see a customer's leaving, they do whatever they can to keep that customer there because it costs so much more to get a new one. In this case, you know, with Greece exiting the euro, there's a lot of costs here that people might not be seeing. It looks calm there now. Again, what does it look like when the food runs out? What does it look like when the medicine runs out?
Well,
it could be more expensive in the long term.
After the fourth or fifth sob story, the cable company walks in and takes the cable box back.
I think the Syriza government has overpromised here, and that's my concern.
Absolutely,
I agree with
without
you.
a question.
We're going to see civil unrest, and it's going to. I think it's going to be horrific
Does
to watch.
Tsipras keep his job? Because we know Varoufakis just lost his job today.
He cannot possibly. But you know what I'm saying is, how about a deal that gradually escorts them to the door and maybe keeps them in the European Union as you know, cooperative as they can be, instead of one that boots them out the door.
Jim, why aren't our markets down more?
A couple of things. One is I believe Greece unto itself is fairly contained. A, to the region, and B, to some very large creditors, namely the Troika, and then some very large, again, countries and their banks. Not a lot of exposure here. But I will say I am concerned about the kind of collection of Greece. We're dealing with Puerto Rico. We're now dealing with Illinois. And obviously a heating up of China and the concerns. That whole composite makes me a little concerned for the U.S. markets.
Let us touch upon China, the Shanghai composite and the Shenzhen composite. It's not that they were down so much today. It's that they're in bear territory, down 20% over the past couple of months. I don't know if we can show those indications, but...
And the Chinese government is making a pretty hard sales pitch. It's time to get into the Chinese shares. You would think, if they're so attractive, why do I need the pitch? And the answer to that is they want to try to keep the wealth effect going of rising shares, because that's good for their economy. But the other thing is they have these debt-saddled companies that they're looking to IPO to raise cash.
Arguably, China's a bigger story than Greece, but Greece is just a great story. Jack Howe, Jim Frischling, great to see both of you.
Thank you.
We're still waiting on the president, in fact, so I'm going to hand